Hello, 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 hi, and welcome to What's Moving the Markets for ETX by Philip Concher. My name is Philip Concher. I'll be your presenter for today. So we'll start the webinar properly in a minute. I'm just trying to see if you guys are seeing the actual screen and you can hear me okay. You can see the camera, and then we can take it from there. So let me just go and pop out the attendee list just to see who you are. And apologies if I'm looking away from the camera because for some reason everything is coming up to this screen here. Maybe I could do something like this and see if that works. Okay, this is better. This is much better then. So if I can do that, I can see all of you there. So big hi to all of you guys. Don't be shy. Come into the chat rooms. If you have any questions, also come in and ask. I'll be more than happy to talk to you about anything that's of interest to you. Because at the moment I'm talking to the screen, okay? So it's not always the best way to have a intelligent conversation. And quite often when you do these kind of webinars, you think to yourself, is anybody really bothering with what I'm saying? Is it really relevant or not? So I would encourage you to tell me, hey, that's boring, move on to something else, or this is really good, I want to hear more of that. Excellent. Craig, G. Rose, Adrian, Yvonne. Brilliant. Thank you so much, guys. Okay, now, so let's start the webinar properly. For those of you who haven't seen me before, my name is Philip Concher. I run a company called Forecasats, and if you are ETX, a live account holder, you are more than welcome to come and join us in Forecasats. It's membership-based community, but it's free of charge to you as a premium clients of ETX. And if you don't know how to qualify for it, or if you don't know if you qualify for it, I would strongly encourage you to go and speak to your account manager and inquire about it. I'll show you how to register a little bit later, and I'll show you what a Forecast is, because I'll be using combination of ETX and also my own charts to do the market analysis. Just to set the expectations with you for today's webinar is we'll be using a combination of live markets charts, looking at some prevailing trends, levels, the reaction in popular trading markets and financial instruments, i.e. liquid financial instruments, which was caused by either a politically driven events, i.e. the Italy, Trump, therefore trade war tariffs, and then obviously non-farm payroll. This was the big one. This was a big one today. And then yet again, that would involve a Trump by a little bit as well. Now, if you've seen any, hi Cassandra, if you've seen any of these webinars before, you know that they all start with a disclaimer, and this one is no different. Basically, anything that we discuss here is available in the public domain. It should not be considered to be advice for your trading or investments, because we do not take in consideration your personal objectives. Also, hopefully you are trading with ETX. If you're not, you probably will, because you're accessing this webinar, and you should understand the benefits but also the risks that leverage carries, and if you don't, speak to your account manager and say, I would need to know a bit more about what the CFDs and spread betting is, or margin forex trading is, and they would be more than happy to talk to you. They're nice guys at the ETX. So basically anything that if we go into a live markets, which we will, and I do get excited a bit and start jumping around here and looking at some levels and saying, this is really important. I am not telling you what to do with it. Basically, I am providing you with enough information so that you can make your own informed decision and identify some levels of interest for you. Now, there are some basic trading rules as well. So we have only 2 or 3 slides and that's it, because we'll go in the live market. I think that's much better than just talking through slides. But I usually start the webinars with this one because it sets the expectations, especially if you're new to trading. It's good to understand that there are some rules that you should follow, which would provide you with a bit of an edge if you're trading. So never add to a losing trade, never lose more than a percentage or specific percentage that you are comfortable with of your trading account or capital on any one trade. Never trade anything you don't really understand. Trade in a direction of the trend, i.e. prevailing trend, in your trading time frame, which is quite specific. Lots of people don't have a concept of the time frame at all. Only look at low risk, high reward trades or high probability setups. If you don't have signals, you don't have to trade. Fairly straightforward. Only look for low risk, high reward trades or high. So basically, look for a disproportionate amount of reward, potential reward, for a very definite and much smaller amount of risk that you're willing to take. Trade your plan, your system, your signals, the chart, and price action, and not your opinions, bias, and predictions. Loads of people have a firm belief that markets are overvalued or overpriced or underpriced. Even if they're eventually right, markets can stay irrational for so much longer than anybody can stay solvent. So what I'm trying to say is, don't trade what you believe should happen and will happen. Trade what you see. Find a trading methodology that fits your personality. This is also very important. Don't trade before you have a complete trading plan, including rules on entries, exits, and risk management. Hugely, hugely important. The only thing that you can control is risk management. Will the trade play in your favor or not? That's not in your control. Markets are random to a huge degree, and you might have these clusters of winning trades or losing trades, even if you are basing them on the same or identical technical trading system. So you need to be able to sit through that process of sequence of the losing trades, because by the definition of the randomness, if you have a sequence of losing trades, it doesn't necessarily mean that the very next trade you take will be a losing trade as well, if it is based on the same set of criteria that you used in the past. Now, the size of your winning and losing trades determines your trading success. Your risk management will determine the success of your technical trading system. So that's very straightforward as well. Now, if you want to know how to register for TraderCast, you can simply go to tradercast.com, click on sign up, create your account. This is the important bit. In the introducer field, you must put ETX capital here. Click on terms and conditions and click on register. When you do that, it will take you to the payment stage. When you come to this stage, do not leave your card details. Just click log out. Just click on this log out button and then email your account manager or contact your account manager and tell them, hey, I've registered for TraderCast. Can you please ensure that I get my access? And they'll email me, or you can email me through the contacts provided, and you say, I've registered, how can I access TraderCast? And in TraderCast, we run daily broadcasts for about 9:30 in the morning until 11, 1:30, 3:30 in the afternoon, about 4 hours a day of live trading broadcasts. We post everything in a community. I'll show you all of that in a bit, so you can see if it's for you. And if you want to join us, you're more than welcome to. More than welcome to. Now, today, from the economic calendar point of view, we had a significant day. Obviously, today was a non-farm payroll day. And that day was actually it's normally very, very volatile and so on. And we had a fairly decent move in euro, in dollar itself initially, and then we had a move in gold, and then we had a decent move in US equity indices, because there was some data that accompanied non-farm payrolls afterwards, and markets were quite nice and volatile, and they moved very, 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 very nicely today. So the big story of the day was that Italian certain members of Italian government now, which are now in government, were preparing to vote to create the funds for any other countries which might want to leave Eurozone. So that was a big kind of bad news that happened, and that caused a bit of a knee-jerk reaction and a market volatility. That was then quickly denied, and so on. The other thing that actually happened today, we had the initial move in US equity indices, because the number, non-farm payroll number that came in, the expectations were that we will get 186,000 new jobs created in the past 12 weeks. Sorry, I'm just putting a Wall Street here so you can see what I'm talking about here in particular. And it's a nice and green candle, which wasn't initially that big or that green, because what happened is our dear friend Donald Trump tweeted ahead of the number, "Hey guys, I cannot wait to receive the numbers. Wait until you see what's going to happen," and so on. So as a president of US, he has the access to unemployment data prior to the release. So he basically saw the report last night. And then he decided to tweet about it and boast about it, because it was much better number. It was 223,000 jobs created instead of 189. I believe the figures were saying that a black American population is unemployment is at its lowest level since 1972, and there was a whole story about positivity and things like that. And normally when you see news like that, US equity markets like Dow Jones, like S&P, like Nasdaq, they tend to break out higher. They tend to be, are really good and spiky and so on. But instead, it was a very muted reaction at 1:30, which is what you're seeing here. Very, very muted reactions, because some of that excitement was almost deflated by what Trump said in his tweet, which is really strange. That it's a big data. Big event, and traders wait for that to kind of trade the markets, and they're looking forward to this volatility. But then that was the result. So basically, looking at this from the trend point of view, Wall Street is uptrending in various different time frames. Daily appears to be looking at a breakout. So let me just show you how that looks in a daily, and then we can go and look at some currencies. I would like to talk to you about dollar index and euro dollar. And cable had a lovely, beautiful move today. Euro sterling had absolutely amazing moves today. Dollar yen, dollar CAD, gold, loads of different things happen. But since we're talking about US unemployment, I want to talk to you about this. And the daily time frame is creating the sequence of lower highs, and this appears to be a breakout. It appears to be a breakout from this. Let me just make this nice and blue. Sorry, apologies. Yeah, so we had this falling resistance trend line here, which was capping the sequence of lower highs, and now we are breaking out higher. So oscillating indicators are pinching very close to neutral, just below neutral. So anybody looking at this from this particular longer term time frame is saying maybe this is a breakout, and we could see a breakout higher. The price action is currently trading above 20, 50, and 200 period moving averages. So all from a technical point of view, all very, very positive. All very positive for the US equity indices. In this particular, this is illustrated by Wall Street. If you're looking at the 4-hourly time frame chart, the 4-hourly time frame chart is creating this sequence of lower highs and lower lows. So if I use the same analogy and draw what appears to be a falling resistance trend line here, you can see that there is a bit of a rejection at this current level. But if we see the end of day close, and a move higher out of this, which potentially looks like a bull flag, then all of this becomes a flag pole, and the breakout higher would appear to be very, very bullish, initially targeting these highs up here at 2560, 2565 area before moving higher. The important level of support that everybody's watching from the intraday point of view is based at 24,400, followed by 24,350, 24,250, which is down here. So as long as the price stays above this area here from the 4 hourly or hourly point of view, it appears to be indicating that bulls are in control and that they would be looking for more of the upside move if the breakout happens. So quite often you see the breakout and a confirmation before the spike higher. And that's pretty much it from the Dow Jones point of view. Gold S&P is currently trading at 2732, really good level of resistance, a nice spike higher. We also have euro sterling at 87.37, 87.40, euro dollar at 116.60, cable massive breakout higher at 13.44, dollar yen basing around 109.45 in a bullish way, but sideways for a number of hours now. And then we have a gold currently trading at 12.94, which is a huge level for gold. I'll show you that in a minute. And we also have crude oil, very, very bearish, very, very bearish at the moment, below 66. It's currently trading at 65.80, 65.80. Because OPEC members came out and they said, look, we are carrying on with this production cuts, but we might readjust the levels of production cuts and quotas at some point in future. And that caused market participants to believe that there is potentially an oversupply of oil, and oil kind of lost 60, which is WTI, US traded oil, 67, 70, 67.40, and then it dropped down to 66, nice and round number, and now it's 65.80. We can talk about crude oil in a bit as well. So that's a very quick summary. Now let's go into the TraderCast charts and see if we can get to anything that could be of interest. Okay, so what you're seeing here, guys, this is a TraderCast. So these are the chat rooms. These are the public chat rooms. You're more than welcome to come in and join us during the broadcasts and speak to the presenters. I'll close this for now. Your friends and people who are online, you can see them here as well in the chat section, but I'm going to close all of that for now. So now this is the charting package. Before we go into anything else, I just want to show you what TraderCast is and how TraderCast works. You can come in here, watch video reports. You can click here, watch Bloomberg TV. You can also put it on a separate screen. This is all designed as a really nice and neat addition to your trading Reuters news feeds. You can have your watch lists. You also have your trading alerts and signals displayed here, providing you with information that something's happening in your watch list in a particular time frame, and it's giving you a historical reading of something that's that was triggered by the same setup. So, for example, euro dollar. The price action crossed 34 EMA. This is the price. When the same thing happened in the past 8 times, the price went out 7 times out of 8. And you can hover over this, and then you can click on this, and that takes you to the live chart. You can actually see it. So it doesn't necessarily mean that you should trade of this, but it does definitely help. You also have this, your heat maps, and you can drill down to the actual price. You can see the correlation. So you immediately see the feel the prevailing trend And the greener it is, the more bullish it is, the redder it is, the more bearish it is, but that's how it works. Then what happens on this tab here, which is called Livecast, every day, sometimes twice, sometimes 3 times a day, we have broadcasts, and they look like this. You can basically see the camera in the corner, and then you can see the presenter, and you can also see the charts that we are talking about, and all of these charts are then analyzed in real time, like what we are going to do right now, and then we post them in the community. So the community posts are here. You can physically click on them, and you can say, oh, here we go. Philip was talking about Dow Jones, which is exactly the same thing that we were talking about a couple of minutes earlier. And I was looking at this level here at 24,504 as a major resistance area. If broken, then it would open up the way for the retest of 24,645, going forward towards 24,787, 24,900, and so on and so on. The important support in our case was this shaded area here. If that's lost, then bulls on the login control and so on. So if you're trading anything, including commodities, including S&P, including FTSE, including DAX, including any currency pairs, and we'll be looking at them now. DAX, euro dollar, cable, anything. So you basically click on this, and you can read the analysis. So this was a funny one, not funny, but actually very good. This is Nifty 50, because Indian GDP came out yesterday at 1:30, and this chart was looking really, really bullish. We potentially indicating that India is the fastest growing economy in the world, which is what happened. And then we saw the breakouts above this resistance area, and the price spiked almost 100 odd points very, very quickly. So a variation of different things, and you can find things that you want to see. You can analyze your levels, and then you can comment in here. And if you comment, the person who posted, for example, gets instant notification that somebody commented, and then they can engage with you, talk with you, and that kind of stuff as well. So very, very educational as well. New people find this very educational. You can also watch this education in a video form here. So you'll see me probably use Fibonacci or pivots, or maybe talk about price patterns and things like that, like flags and triangles and pennants. You can just simply click in here, and you can watch the video, and which then basically tells you how the traders use that kind of pattern recognition in this case, or indicator, and so on. And then when you're finished with it, you can just close it, watch something else, coming back into the broadcast and say, now you know what you mean. You were talking about pennants. I didn't know what they were. I can watch it, and you don't feel alienated. We're trying to keep it as simple as possible. And we would love to welcome you to our community. As I said, go and register. It's free of charge. If you're ETX live client, it's completely free of charge for you. It's about £40 a month otherwise. But call your account manager at ETX and inquire, and they'll be able to tell you how to register again, or I can reply. I can show you a bit later. Now, let me just ask you something first. Before I start talking about dollar index and euro dollar and cable and dollar yen, what would you like to see? Is there anything that you are paying attention to? I mean, what's of interest to you? Do you have any questions on TraderCast? Do you have any questions on markets? Do you have any questions on sentiment, macro? I don't know, the stories that we were talking about earlier. Gold and cable of interest, G rose. G rose, absolutely not a problem at all. Sterling Japanese yen, Craig is saying, absolutely good call as well. Now, so let's go and check gold and cable first. So let's go and do the cable first, and then we can look at a gold and definitely sterling Japanese yen. Now, cable was under some severe pressure, guys. It was under some severe pressure. We don't really need to talk about this. It's very, very much self-evident. And then yesterday, sorry, the day before yesterday, when we saw the pullback in dollar index, cable created a bit of a bullish reversal here with this, which is known an inside bar, and the significance of that inside bar was further supported by the fact that it came off 50% fib retracement as well. So this corrective move is a 50% retracement of this overall impulsive move, or very close to it as well. So longer term traders were looking for some levels of interest. Anybody who was bearish was quite likely looking to cover their shorts at some point in time. Although this is downtrending at the moment. There's no two ways about it. This is not a bullish trend change. It's just shorts covering, basically. So if we go into a 4-hour, so daily, just to put it in the context of the trend, daily is below 20, 50, and 200 period moving averages. It's creating a sequence of lower highs, lower lows. 4-hourly. 4-hourly is clearly downtrending, but the 4-hourly time frame is breaking out, or it's very close to the breakout. So there was a breakout here, and then we have a second potential breakout up there. So this was the first breakout. Oops, sorry. Where is my trend line? So here is my trend line. So this trend line here is my resistance trend line, and I'll color it red, where the other one here is blue because it was resistance. Now it's newly found support. Breakout, retest, and then off we go higher. So from the 4-hourly point of view, these levels up here are actually of a huge interest for a number of reasons. You have the sequence of these previous highs here. And then if I extend that into the past, they would come to the cluster of this previous consolidation. Also, if I look at this horizontal here, we have 134, which is a really nice and round number as well. And if you want to extend it lower, then you have the sequence of these previous lows here as well. So really decent levels of interest from the resistance point of view. And what I'll do is I'll color them red so that nobody gets confused. The other thing that's actually going on at the moment is if we are seeing a pullback in dollar index, and we also saw some decent data this morning from the UK as well. So it all kind of helped. Now we are coming, this is downtrending. It is downtrending, sequence of lower highs and lower lows. The oscillating indicators are into overbought territory, and the price action is currently coming to the level of major resistance. Now, if that resistance holds and we see a fresh wave of selling returns and the price is pushed lower, then bears are still in control, and all of this here would become a bear flag in 1-hourly time frame. It would look like this. So there is your support, and then this here becomes our resistance. And these type of patterns, they tend to be referred to as continuation patterns. They have the tendency to break out in a direction of the prevailing trend. And in this case, the 1-hourly time frame price action is rallying against the overall prevailing downtrending market in 4 hourly and daily. So you have 4 1 hourly candle in 1 4 hourly candle. You have 4 4 hourly candles in 1 daily candle. So the other 2 are more significant time frames, heavier time frames. So now the bears are in control below that 133.45 and so on, with the view that they might be looking to target supports at 133, below 133. Let me just put it there. Why 133? It's nice and round number, easy to remember, and then it references the cluster of these previous lows here. Look, low, 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 high, 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 low. Test it over and over again. Easy to remember, 133. I don't have to think about it. If it goes there, I'll react to it. Simple as it is. Other traders do the same thing. Round numbers are important. Now, the other thing that happens as well is this area down here, then that becomes 132.64, followed by down here 132.20 and so on. So bears are in control below this area here, and what bears are expecting to do is they're expecting to find a reason to short. They're looking for a confirmation based on their technical trading system and a strategy to look to short with the view for the price to do something like this and eventually break through this rising support trend line, maybe tests from underneath as a confirmation, and then a flush lower towards 133, 132, 132.20 and so on. Now, that's the bearish scenario. Now, the other scenario, which could possibly play out, because there is so many bears at the moment who are looking to short. If we see maybe a pullback in US dollar or something else happens which causes a sterling to rally. So maybe Mark Carney comes out and says, you know, this interest rates that we were talking about that we will hike, but then we said that we won't. Guess what? We are thinking about it again, and we are quite likely looking to hike those rates sooner than you think and faster than anybody else is anticipating. By him saying that this will just spike higher. So the confirmed breakout and a 4 hourly close or hourly close at least, or end of day close, even better, above this current area of resistance at 133.45 would open up the way for the spike higher towards 134. Breakout above 134 would target 134.75, followed by 135. That's cable. Now, before I go and do anything else, I just want to check. Just checking that I'm not losing anybody, or that maybe this is too simplistic for some of you guys. I really don't know. I don't know you that well. If you come to TraderCast and we get to know each other, we speak on every day, and you speak to other members, people tend to know how people think and what they react to and so on and how they trade. But just checking. All clear. Brilliant, guys. Thank you so much. So that's the reason for it. So this is 1 hourly time frame. I can go down to a 15-minute time frame, but we are coming to almost the end of trading day. 1 hourly time frame would give you some levels that you can potentially use over the coming week. So Monday, Tuesday, Wednesday, Thursday, Friday. 15-minute time frame price action at the close of trading week on Friday. Really, it's not the best way to trade. But could you do a dollar Japanese yen? Hoda, yeah, absolutely. I can do dollar yen, not a problem at all. Yes, Federal Reserve is planning to hike rates at least 3 times this year, and that's the reason why this financial instrument here is rallying. So let me just show you. This instrument is called dollar index. So if you guys are looking to trade euro dollar or cable or dollar yen or dollar CAD or Aussie dollar, if you're looking to trade gold, if you're looking to trade oil, and if you're looking to trade copper, if you're looking to trade US equity indices, you should be looking at this, because this tells you everything you need to know. This is dollar index. This index follows the movement of US dollar currency against the basket of 6 other currencies: Euro, Sterling, Swiss yen, Norwegian krona, and Canadian dollar. So this baby moves 15, 20, 30 points per day. Euro dollar moves 75, 150 points a day. They're inversely correlated. And this financial product here is directly governed by what Federal Reserve does. Okay, so it's a hugely important product. So it's coming to a major resistance at the moment, because from the current swing highs all the way down to the swing lows, we are breaking that 61.8, and we are also coming to the cluster of these previous highs at 94.68. So what's happening here is, this is the daily time frame. You can see a nice basing pattern here and the breakout. And I'll show you the complete inverse in euro dollar. You'll see a topping euro dollar and a sell-off. And I can put two charts next to each other, and they're mirror image, just in reverse. Hugely important to watch. Dollar yen, hugely important to watch this. So when you see this candle here is a bearish engulfing candle. Okay, that candle normally indicates a major trend reversals. So dollar is still bullish, but it is possible to presume that we could see maybe a deeper retracement to here, here, or here before that rally continues. And by dollar index doing that, the opposite happens in euro dollar. So euro dollar, let me just show you exactly the same chart. Is this all okay? Are we following all of this? You can see a topping formation here in euro dollar and a sell-off. And do you remember we saw a bearish engulfing in dollar index? Look, guess what's this? This is a bullish engulfing in euro dollar. This candle opened after some substantial amount of selling, slightly lower than a previous candle, and the trading range completely swallowed and engulfed the previous trading range, i.e. the red candle. This normally indicates a major trend reversal. So if we go and apply the fibs from this swing lows to this swing highs, we can also see that this is very close. I'm not drawing it correctly because I'm rushing here, but this is very close to the 50% fib retracement. So it's a major level of interest. Now, from the intraday point of view, euro dollar is under pressure in the same way as a cable, absolutely same way as a cable. So you have the sequence of lower highs and lower lows, and you have the trend line, which is looking like so. And this appears to be a breakout. This appears to be a breakout. These types of breakouts normally spike a little bit higher. So let me just show you how this looks in an hourly. So we have the trend line, and there is that breakout. So what you saw earlier, this potentially looks like a bull flag formation. Okay, so they tend to break on the third touch. They tend to break in a direction of the prevailing trend. So in uptrending markets, if the price consolidates in a flag formation, it has tendency to break out to the upside. Therefore, it continues with the trend. The trend has the greater probability of continuing than reversing. So something like this could possibly happen. And then the spike higher towards this 117.80, 118 level. Okay, so in order for us to get some feel for potential resistances, you can just do inverse. So there is your 50 and 61.8. So let me just color that red so you'll know that this is our resistance. Okay, so we are talking about resistance here. So 117.65, 118, 118.20, 118.80. really, really important levels of resistance. So the breakout would quite likely reference these areas. Our bullish traders would be looking to reference these levels at the profit target levels, assuming that this level here holds support. So this is your point of control. This is the level above which intraday bulls are still in control, and below which bears regain control from the longer term point of view and try to push the price lower. 1644. Now, that would open up the way for the retest of 1615. Below 1615, we are looking at these areas down here and then down here towards 1574. Now, so that'll be the bearish reaction. The bearish reaction would be a loss of these. So let me just do this quickly so we can see a loss of this area here, a retest from underneath, something like that, and then dip lower to this area. So bears are looking to short below this level with the stop losses up here with the take profit and take profit. Bulls are looking to buy above the breakout at 117 with the stop losses at 1644, therefore risking about 65, 50, 65, 70 points, depending where they enter. The candle will tell them where they can enter. The trading system will confirm it for them. And with a view to take profit at 1760, followed by 1820 to the upside as well. So now, let me just show you how this works from the TraderCast point of view. So we would do this type of analysis, and we would basically say, as a presenter, I would be looking at this and say, hey guys, keep an eye on this. This is the important level. I would do something like this and say, important, I can't spell, point of control at one spot 1644, and I would make it nice and red and colorful so that everybody sees that. Okay, now then what happens is, because we are talking about this, and then you guys will come in and engage and say, Craig is saying perfect. Craig, why don't you come and join us in TraderCast? We would love to. If you like this kind of stuff and you're finding it useful, you would love TraderCast, and it's free for you. Because if you're a ETX Capital live client, go and inquire, talk to your account manager, and they'll tell you what you need to do to get it. So then what I would do is I would click on this save button, decide to save and share. Okay, save and share, and then this would be posted in a community, and then I can say euro dollar, euro dollar, bull flag. Obviously, I would write more information about this, and I would say I'm looking to enter, or I'm looking to short or sell, or whatever, 116.44, looking to take profit at 118, or whatever I decide to do, and I would decide to put my stop loss at 116 even, or whatever, or just analysis. It could be just analysis, point of control, and so on. And then that's posted in a community. Other members can click on that, see it, see the levels, and this might correspond to their way of thinking. It might save them some time. The feedback that we are getting is that loads of people who come to TraderCast say, oh, this is great. I always knew how to get in, but I had problems. I had the idea how to put a stop loss, but I had problems where to take profit, for example, and so on and so on. If you like more of a fundamental analysis and a macro stories, there's plenty of that too. Big write-ups based on value and fundamentals and a macro and geopolitical as well. So that's all there for you. Now, we talked about euro dollar, we talked about cable. We did say that we want to talk about dollar yen as well, and then sterling Japanese yen. So dollar yen is a mirror image of dollar index. If you remember, what was happening here is this was a shoulder, head and shoulder of a inverse head and shoulder neckline with a breakout. and then basically the price went up higher. Very similar to what we saw from the dollar index point of view. We are coming to some major fib retracements of 61.8%, and as such, these levels are respected. And then basically what happened is that we saw a pullback, which created a bearish reversal. So basically what you have in daily time frame here, you have it could be called inverse hammer, it could be called shooting star, because it's a green candle with a big wick on the top. So this normally indicates that at some point this candle here was bullish, but then sellers return. This combination of these three candles here, this is known as a star reversal. Green, dodgy, spinning top followed by red. They usually precede a bearish reversal. This here is known as an inside bar. This normally precedes a reversal. This normally precedes a reversal. So there was telltale signs. There were signs telling us that potentially something is not right for the bulls. But if you go and check out the dollar index, you see a bearish engulfing here. If you go and check dollar yen, because this is US dollar as a base currency, Japanese yen as a quote currency, it's correlating with what dollar index does. So if dollar index pulls back, dollar yen tends to pull back. If dollar index pulls back, euro dollar tends to rally, cable tends to rally, Aussie dollar tends to rally, and so on and so on. Do many of your clients still use MT4? Yeah, look, I love MT4. Look, I love MT4. Brilliant. Okay, you look, it's old, it's clunky, it's old-fashioned, but it works. For charting, absolutely amazing. For the trade execution, not so much, but I like it. Where do we get to check dollar index? Speak to your account manager. ETX clients up can get that data. Maybe it's called dollar something else. Maybe it's called USD index. Maybe it's called dollar sign index, or whatever they call it differently. The real name for that financial product is DXY. DXY. It's traded in futures on Chicago exchange, and it comes in on regular monthly futures. So it gets very little data. What brokers like ETX or all the others who are offering OTC they're providing the continuous price as a derivative, and they call it something else because of the trademarks. And the legal rights. But yeah, it's a good one to watch, absolutely good one. So dollar yen bearish, initially supported by this 108.40, and if we see that hold from the intraday point of view, that's a significant level of interest, because what happens with dollar yen, we are seeing this as a breakout, and then this breakout is initially capped by these sequence of the lows here at 109.73. So why do you think this candle went up and started reversing here? Why there is a wick here? Because it was a previous high and a previous low, and also it's a fib from here to here. So there's a cluster of things pointing to that level, which could be of interest. And the more things that point, there's a moving average in a different time frame there, and so on and so on. So the more things that are pointing to the same or similar levels, the more significant they become, and the more value they hold, because more people are looking at them. So either from a bullish or bearish side, or as a take profit level, or as a stop loss level, or a limit order level, or whatever. So a dollar yen initially, it's bullish, but capped by 109.73, 109.86. A confirmed breakout higher would open up the way for the retest of 110, 110.15 to the upside. For clues, go and watch dollar index. And if dollar index starts rallying, this dollar yen, it's very likely going to rally as well. Now, the other thing, if we see a stock market's rally, that normally means that there's a reaction in dollar yen as well. So, and there is a reaction in gold as well, because it's no longer a risk requirement as such. More people are taking money out of yen and parking it into equities and so on. So from the intraday point of view, from the hourly point of view, I would be looking at these two trend lines here, and I would be saying, as long as this trend line stays intact, bulls are in control, potentially looking for a breakout. So something like this is developing at the moment. It's not clear cut, it's not clearly visible here in 1 hourly, but if you go down to a 15-minute time frame, it becomes much better. So there is your bullish pennant being formed right as we speak. And these types of patterns, they have tendency to break to the upside. Falling pennants in uptrending markets are known as continuation patterns. They tend to break to the upside. The way they break, they do something like this: breakout, retest, and then spike aggressively higher. The way to measure their moves is you can take a previous significant high to the widest opening of that pattern and measure it as a move. So there is your profit target level. The other way to measure this, more speculative traders will take the previous consolidation range as a flagpole, and they would extend that higher, and that brings them to 110. 110 is what? A round number. People tend to remember round numbers. So that's where profit targets would be quite likely for anybody who is sitting in a bullish camp, and most of the people who are looking to do that would be looking at this area here, 109.40, as a major support level, because their stop losses would be below that level. If for whichever reason we see a loss of this support and a dip lower, something like this, bears are in control, and it would change the outlook, potentially targeting 109, 108.80, 108.75, and so on. Guys, it was lovely talking. Is this regular recurring webinar? Yes, we do this every month with ETX, but if you join TraderCast, you can see this every single day, twice a day for about 5 hours. And you can also access all of this in the community. You'll be bored. You'll be bored of us. You'll be bored that. I don't want to watch this anymore. Yes, come and join TraderCast. It's free. If you have ETX Live client account, it's free for you. Go and speak to your account manager. Do we need to check on the web about next live trading webinars? ETX have a registration page, yes, but if you access TraderCast by doing this, so basically go to tradercast.com, click on sign up, complete your username, put ETX here in the introducer field, click on terms and conditions. When you come to the payment stage, when you see this £40 a month, log out, do not pay, and wait for me to reply to you and activate your account. Alternatively, go and hustle your ETX account manager and say, hey, I saw this crazy guy Phil talk about markets yesterday. I really liked that stuff. I would like to join TraderCast. Can you please contact him and get me on board? And then your good account manager will get in touch with you and say, my client is qualifying for this. Can you please activate his account? And I will gladly do so and introduce you to your community. It's not just me. There's a bunch of people here. There's a huge amount of people here who are using this site every single day. And there's plenty of chat rooms, so you can see what people are talking. They're constantly posting stuff, constantly seeking and looking at the markets, looking at the levels. which could be of interest to the whole community, anybody who is watching that. And also you can watch this, you can click in a community and see and access all this information as well. Okay, so yet again, I did start this broadcast with a disclaimer. I know that I do get excited from time to time. This is not advisory. I'm only trying to help you make your own informed decisions. So, is this considered a pivot? Craig is saying pivots. As you can see, we are using loads of pivots in our analysis in community. So let me show you. There is plenty of pivots. There is pivot S1, S2, R1, R2, and so on and so on. So I use pivots all the time, but I don't know what you know, guys, and I don't necessarily want to freak you out. So I'm using very, very basic stuff. If you're finding this useful, you will find TraderCast education even more so. You will find our broadcasts, live trading broadcasts, very educational. If you understood what we were doing here and you found it easy to follow and basic, then come and join us for the broadcasts, and then we'll talk about all the other stuff that's of interest to you as well. Sorry, I have a few people saying things here. Hoda is saying what to do to be able to analyze like you. Come and join TraderCast, you'll learn. Okay. I tried, but from Myanmar and not active to join. They don't allow me to join because of my nationality. Well, why don't you do this? Thuzar, go to tradercast.com, click on sign up, click on a payment. You can pay £40 a month, and you can pay for your membership if you wish. That's an option as well. Thank you for this evening, Philip. Have a great weekend. I'm joining TraderCast right now. Thank you. You're more than welcome. Ardian saying, I have an account, I'm joining. Yep, brilliant. Hey, welcome. I'll send you the invite to connect in the chat rooms, and I definitely want to join Junko Adachi. Welcome, guys. Hassle your account manager. Say, hey, we saw this, we want to join. You know, make sure you speak to Phil. Can't wait to join. Thanks, Emil, for all the info, Richard. Thank you, Richard. You're more than welcome. Thank you. We'll check later. Okay, guys. Look, you are all more than welcome. It would be lovely to introduce you to the other guys in the community, just to kind of set the expectations with you. This is not thousands of people. It's a very small community of traders we are talking about. You know, on a busy day, 30, 50 people in the chat rooms. It's not kind of thousands of people, but it's a good community, and we would love to welcome you in. And if you feel like joining, you're more than welcome. Just to finish this off, I'm going to go back to the disclaimer. ETX Capital are your execution-only brokerage. They're not here to give you the advice. And also, if I do get excited about anything here during the live markets, I do not take in consideration your personal trading style, your personal trading and investment objectives. I'm just sharing with you market analysis and hopefully enabling you to make informed decisions whilst providing you with a technical analysis applied in real time. The example of it followed by obviously economic calendar, fundamentals, and so on. So thank you all very much for watching and listening. Stay safe, happy trading, and I'll speak to you again next month on ETX, and hopefully to some of you on TraderCast on Monday. Thanks, bye.